Welcome back to Synaptic Dividends. Okay, today we're talking about a company that's, well, it's probably all over your house. Procter Gamble. I mean, think about it. Your laundry room, your bathroom, your kitchen, their stuff is everywhere. But we're not here to talk about Tide Pods. We're here to talk about something much more interesting. Their dividend. So here's the big question we're tackling. Is P&G's famous dividend still a rock-solid source of income for you? Or, is it starting to show its age? To figure that out, we're going to put it through a little, let's call it a 3-part dividend health checkup. And we're just looking at the hard numbers, no fluff. Ready? Let's get into it. All right, first up is test number 1, dividend safety. Think of this like checking its vital signs, The most important question is, can P&G actually afford the dividend it's paying out right now? To get the answer, we got to look at my absolute favorite metric. And that metric is the free cash flow payout ratio. I know, it sounds a little technical, but trust me, the idea is super simple. It just tells us what chunk of a company's actual cash profit gets paid out as dividends. That's it. And it's the best way to measure safety because, well, cash doesn't lie. So what's P&G's number? Boom, 68.3%. Now that number is right in the sweet spot. It's fantastic. Here's what it means. For every single dollar of pure cash P&G brings in, they're paying out about 68 cents to shareholders like you and me. That leaves them a ton of cash left over to grow the business, pay down debt, whatever they need to do. So yeah, the dividend isn't just safe, it's comfortable. Okay, so we know the dividend is safe right now. But what about the past? That brings us to our second test, the track record. Because let's be real, a truly great dividend isn't some one-hit wonder. It needs a long, long history of being reliable. And, well, P&G's history is just, wow, look at that number, 69. That's 69 consecutive years of dividend increases. Think about that. That's not just paying a dividend. That's giving shareholders a raise every single year for almost 7 decades. That puts P&G in this super elite club we call the Dividend Kings. It's a huge deal. And get this, they're not just resting on that history. Check out these growth rates. In just the last year, the dividend grew by 6.5%. Now compare that to its 10-year average of 4.6%. See that? The growth is actually speeding up. That's an awesome sign of momentum right now. Okay, time for our last and honestly our toughest test, the stress test. Look, it's easy for a company to raise its dividend when everything's going great, right? But the real question is, what happens when the world goes crazy? How does P&G's dividend hold up under extreme pressure? Just look at this. We're talking about the 2 biggest economic meltdowns of the last 20 years, and what did P&G do? They didn't flinch. In the middle of the 2008 financial crisis, they raised the dividend by a massive 14.3%. And then, in 2020, with all the chaos of the pandemic, boom, another 6% raise. That, my friends, is what a truly battle-tested dividend looks like. So, let's recap. We've checked its vitals and saw it's safe. We've looked at its incredible track record, and we've put it through the ultimate stress test. Time to bring it all together for the final verdict. When you just look at the raw numbers, the story they tell is crystal clear. Is it safe? Yup. A healthy 68.3% payout ratio says it's more than affordable. Does it have a history? Yeah, 69 straight years of raises makes it a dividend king. Is it tough? Absolutely. It didn't just survive the worst recessions, it actually grew its payout right through them. So look, based purely on the numbers we've seen today, P&G's dividend isn't just hanging on, it is absolutely thriving. Now, if you want to go deeper and understand the full business model, the competitive advantages, and the management team behind these numbers, check out our long-form analyses over on our main channel, Synaptic Investing. Because when you find a dividend this strong, it really makes you wonder, what other fortresses are out there hiding in plain sight?